Hey everyone,
Hey, what's going on, Hoff?
Hey, what's going on, Rob? Tsunami?
Hey guys, can you hear me?
Yes,
Yep.
sir. No odd
Excellent.
echoes on your end by any chance? We just had some auditory issues.
I can hear you fine. No echoes for me.
Excellent, excellent. What's going on, guys? How's everyone doing?
Going good?
Fantastic, bud.
Yeah, we really appreciate you jumping on stream with us. We know how packed your schedule is, so definitely appreciate your time today.
You are welcome. Thanks for inviting me.
Excellent. So, I guess if you guys want to get into it, Eddie, you want to jump into some questions and get things rolling?
Yeah, man. So let's get started off with Rob. Can you tell us about you and your team's background and experience and kind of what led you guys to creating or founding Cpool?
Yeah, absolutely. So for me, my journey in crypto blockchain started back in 2015. So back then I was actually building a automated wealth management platform, like a robo-advisor. And what I realized, through doing that was the underlying infrastructure is kind of very archaic. Those things essentially it's like a digital facade, but what's underneath that is all the decades-old infrastructure that underpins many parts of traditional finance. So as I was building this platform, we were going through custody, settlement, that sort of stuff, and it was just super expensive and super slow, and I thought actually, this is what needs fixing. It's not the automation part on the front end; it's really this stuff. So I started looking into blockchain back then as a potential solution for that, and that led me to doing a course at MIT, which was it was called FinTech Future Commerce, but it's predominantly blockchain based course, and through that I kind of really got into this space, and actually kind of shelved the robo advisor project and started on something else, which was essentially tokenizing ETFs. Because that was really what you needed to do first, to be able to then move on to to move this sort of like digital wealth management into the blockchain space. So working on that, and at the same time I was doing all of this, I was still working at a bank. So my main background is in traditional finance. I was a trader at a bank. I worked for about 12 years in traditional finance, and so yeah, I carried on doing that job through all of this, but then eventually I kind of realized, right, I need to step out of banking now and get into this space full time. I've been looking to do that for a while, and then an ex-colleague of mine by the name of Alessio Quaglini, we used to work together at the bank. He'd started Hex Trust, which is a digital asset custodian in Hong Kong.
Mm-hmm.
So I used to be in Hong Kong, but by this point I was in Singapore. We kept in touch. We used to talk about the markets quite regularly, and we just sort of got onto this subject of over collateralization. A lot of their clients there over at Hex had sort of come up against this problem in DeFi lending, and we kind of put our heads together and came up with this idea of solving that problem, and launching a project basically around that. So that was how the idea for Clearpool was born. Alessio and I worked on the solution for some time. We wrote a sort of initial version of the white paper back in, I think it was April of this year. And then we went out. A month or two later. We spoke to some sort of friends and contacts in the industry. Got feedback. The feedback was overwhelmingly positive. We had a lot of great feedback from a lot of very respected people. So we knew we had something good at that point in time. So that was it. That was the moment where I decided to step away from my trading job and start Clearpool. So that was back in I think it was April. Yeah, April. I stepped away and start it all back then. So it's been quite an incredible journey. You know, we've done a lot of stuff, you know, in the last sort of 6-8 months. It's been really busy, but you know, we're very, very happy with the way that it's been received, and yeah, we're super excited because, you know, we know what's coming, and it's you know, this next few months is going to be equally as busy, but it's going to be super exciting. So really looking forward to it.
It's an amazing origin story, Robert. Andrew here, Hoff. And back when you were in MIT, you're a bit of a trailblazer. There wasn't much blockchain courses and you know, focus back then. How have you seen it evolve since you were in school in MIT? Is that something where it's starting to reach mass adoption in these higher education and post-secondary schools?
Yeah, so I think, you know, back then there really wasn't much on it. I mean, this was around the time, I think, you know, just after the Ethereum launch, and you know, at that point in time, I'd really only sort of dabbled with Bitcoin. I figured out how to buy Bitcoin, and you know, I thought I was pretty advanced at that point, but I think I was still quite late. But yeah, you're right. There wasn't really that much, and I think. But what I did find on that course was that there was a lot of like-minded people. You know, this was a space that was really, you know, really attracting some of the brightest people that I certainly have ever worked with.
Fun fact, I got a fun fact for you here, Robert. Your CTO, Pavel, he actually, I noticed that he won a bunch of hackathons, and one of the big ones was the Ethereum 2017 hackathon. It actually happened like blocks away from where I live in Waterloo.
Oh wow!
And yeah, that was a big one. I remember back then in 2017. This is when Vitalik was really trying to promote Ethereum as this new thing, and he was going from school to school, and you know, just all these venues in Toronto and Kitchener, Waterloo, where he went to school. And it looks like Pavel was actually one of the winners of that first hackathon out here. So interesting origin story back then. So it just shows that your CTO's been in. Yeah, it shows that your CTO's been around for that long, and that's actually one of the things our team's always looking for when we're researching new projects. We're looking for bright devs and people that understand the space and have been around. And this is one of the things that jumped out at us with Pavel. Very, very smart guy. What's your experience dealing with the dev team over at Clearpool?
So one of the guys that I was working with on the previous project I mentioned, when we were tokenizing ETFs, this was a project called Vesta. Vesta was amazing. We came so far with that project. So that my CTO on that project was a guy called Alexei Zokov, and he's in Hong Kong. I was in Hong Kong at the time, and when I started Clearpool, of course, Alexei was who I had in mind as CTO. I'd worked with him in the past. Very, very clever guy. He was tied up with another project at the time, and he just couldn't peel himself away from that. But he put me in touch with Pavel, and of course, Pavel and there's another guy called Dan Kaiser who's on the team. He's like a kind of advisor. But those two guys, I had a call with them, and I knew straight away, you know, these were the guys to build this. They talked me through pretty much what you just mentioned, you know, the hackathon stuff, and the project that they used, you know, to win those hackathons, you know, which became a real working product. You know, they've built stuff on Ethereum. They're very, very well connected, especially in Russia, but generally in sort of like the global blockchain development community. You know, they're well known. Yeah, as you said, you know, they won a bunch of hackathons, and yeah, I think there's even a picture of them with Vitalik there in Waterloo, which is pretty cool. But yeah, that was how we met, and like I say, you know, it was very, you know, I made the decision very quickly. You know, these are the guys. You know, we had other options. You know, I'd spoken to other developers, other teams, but to be honest, you know, as soon as I'd spoken to Pavel and Dan, that was it. You know, decision was very easy, and it's just been, you know, such a great decision because, you know, they're incredible, and you know, they really know their stuff. So as you said, this is a very important part of it. I'm very happy to be working with those guys.
That's awesome. To add to the hackathon, I noticed in that particular hackathon, DAOmaker was one of the sponsors of the event, and they had a prize for all the hackers that were there. And I also noticed that DAOmaker was on the website as one of the listed partners with Clearpool. Could you explain if you're at liberty to? I mean, if you're an NDA, that's fine too. But could you explain what the relationship with DAOmaker and anyone listed on the site right now might be?
Yeah, so I mean, the investor, there's quite a big investor list there. So that's essentially a cap table from the 3 rounds that we did, which is we had a seed round back in June. And then we did our private sale, which was split into two parts. Initially, we were going to sort of do them sequentially, but as we started to speak to funds, the interest was overwhelming. We were massively oversubscribed, so we did private sale 1 and 2 at the same time in September, and then we spoke to some launch pads, and DAOmaker was one of them, and they loved Clearpool. They like you guys, they really do their research. They dig very deep, and I think you can see in one of the tweets that they put out. I think they use something like this. This is vastly different, to other lending and borrowing protocols, something like that. So they figured it out. It is very different. It's not really the same as what's already out there, and they knew, that this project was a good one, and of course they were competing for us to launch on DAOmaker, and quite frankly, we were very impressed with them as well. So again, it was kind of an easy decision once we'd had the conversation. We did speak to other guys as well, but they showed an interest to also invest in Clearpool. So that's why they're there on the website. I think we put them on the partner section because they were like our launchpad partner, but they did invest early on as well. So there's some other names there. I mean, you've seen the announcements we've made. Basically, most of the partnership announcements have been made post token launch. I think the one that was announced before that was with Hex Trust. So going back to the beginning, Alessio is the CEO of Hex Trust. So they kind of incubated us, very early on. Hex is an established company in blockchain. They've been around since, I think, around 2018. They're licensed and regulated in Hong Kong and in Singapore. They have offices in Vietnam, and now they've just done a Series B, led by Animoca Brands, and they're now sort of expanding out into Europe and the Middle East. So this is a company with a lot of expertise. Especially obviously in custody, safekeeping of assets, but also in sort of like regulatory, compliance. So Alessio is the CEO, and we announced that partnership very early on. But since then, the other names on there would be Xmargin, of course, is hopefully is well known to you guys. This is something that we wanted from day one. We wanted this partnership from day one. I got introduced to Darshan, CEO of Xmargin, through Alessio, and we hit it off, and they could see straight away what we were trying to do. We already knew what they were doing, and it's all about credit scoring, right? So we've got these single borrower pools, and we wanted to make sure that we gave our lenders, our LPs, every tool possible to be able to sort of measure risk, quantify risk, as well as after that be able to manage it as well. This has been something that's been very important from the beginning. We didn't just want to solve the problem of over collateralization for borrowers. We wanted to make sure that this worked for lenders as well, and of course anybody can be a lender. So Xmargin was key to that, and without going into too much detail, you maybe can look at the webinar that we did with them a couple of weeks ago. But essentially, what they do is they can present a real-time risk score for the borrowers on our protocol. So this gives lenders, so much sort of visibility transparency on how much risk the borrower is taking at any point in time, and of course that makes the lending decisions so much easier when you have that visibility. So X margin is that one. And then we've also announced a couple of others recently. So Lithium, I'm not sure if these logos have gone on the website yet, but Lithium is like a decentralized Oracle platform, and they have like this sort of wisdom node system where they can. So we're going to use that for secondary market pricing. CP tokens, they can be traded in a secondary market. They can be used for risk management. So that's going to come in very, very useful again for LPs. And then more recently, we announced with Parsec, and Parsec was also an early investor in Clearpool. So going right back to the seed round back in June, Parsec was also a very, very early believer in what we were doing. So it was great to be able to announce that partnership as well. And yeah, there's more to come. So I think you guys will be very happy with the next few that are coming up soon.
Yeah, we're very excited with the overlap. A lot of those are actually some of our favorite protocols too. A lot of our guys are invested in Lithium. Parsec has always been one. We know they got the $300 million funding with Solana recently. So I'd imagine they're going to be exploding in the near future and doing a lot of work with their feeds and everything that they are involved in. Some of the other interesting partnerships we noticed was Amber, and as we understand in Asia, they do open markets up for DeFi. They really open up the credit markets quite a bit for you guys. How's the relationship with Amber, and how are they going to be involved with Clearpool long term?
Yes, Amber is going to be a borrower. I mean, essentially, we had a conversation with them quite some time ago, and initially that was really, for them to sort of, be a borrower on Clearpool. To be honest, there's a huge demand for uncollateralized, unsecured liquidity in the space. So, we already knew that. But we wanted to make sure that we were reaching out to these guys, that we were getting their feedback on how we were structuring our protocol, how it was different to the others. So guys like Amber, are very important in those early days. So we wanted to make sure we were on the right track. That we weren't just solving one problem, that we were building something that that was kind of like the platform for other stuff as well. So to get feedback from them was very important. So there's quite a few, and Amber was one of them, and they've just been like very, very like approachable, and they've connected us with some other guys through their network, and very early on they said, yeah, we want to open one of the first pools, Clearpool. They love the idea of single borrower pools, as do actually most of the borrowers. So you might have seen, I think it was yesterday or the day before, we announced with Volkswagen Trading, and Mike, I think one of his quotes was, that they like this aspect because it gives them more sort of more connectivity with their lenders, and it allows them to sort of point new lenders, to Clearpool, to their pool on Clearpool, which kind of lessens the burden for them in terms of like onboarding, payment of loans. So this is, he put it very well. I tweeted it out earlier. Actually, I thought, nice way of saying it in sort of a single sentence. But that's something that these guys really loved, early on. Got a lot of great feedback on the single borrower pool aspect, and and originally we did that because we knew that it would allow us to sort of build this idea of tokenized credit, which is going to be important, as this progresses. We want to talk more about risk management and hedging. It's important, to have created that tokenized credit part, which was really one of the main reasons we did the single borrower pools. But by coincidence, the borrowers actually really loved that as well. So that was good, and so those guys have been kind of like giving us feedback as we went along. We've been throwing ideas at them. Amber have been great, all of them. Volkswagen, Wintermute is also there. They're an investor as well. They're going to be opening a pool, of course. So yeah, those recent announcements, Amber, Volkswagen, they're they're investors as well, but they're also going to be the guys that are opening the first pools. And I think, if your community is not familiar with what these guys do, you should look into them. They're super intelligent guys. They're super transparent. I mean, Wintermute. You can again listen to the webinar we did with ex-Margin Wintermute and one of our investors, Hashkey Capital. They're very, very open, transparent. They want, they need capital to be able to execute their strategies. It's a capital efficient it's a capital intensive market that they're involved in, but the risks are actually quite neutral, and I think they know that they need capital, and if it's coming from the DeFi ecosystem, they're happy to pay for it. And essentially, what's going on here is that you and me, or a huge institution, can equally, we level the playing field. Everybody can lend to these guys and participate in the upside that they enjoy. So have a look at them if you haven't already. I'm sure you have, but yeah, we're very, very happy to be working with these guys and having them as the early borrowers when we launch.
Yeah, guys, check out the Medium page for Clearpool. There's a really, really good webcast with the CEO of Wintermute, Zhao Zhao from Hashkey, and Darshan, and it was going over what the connection is with Clearpool and how they're going to be using the platform within their borrowing protocol. So obviously Wintermute's the 800-pound gorilla in the space, so it's great to have them on board as early adopters. That'll give other companies looking for a similar DeFi protocol to the confidence to jump in and work with you guys. So it's a great early adopter to have. As we understand, Robert, you guys are opening up decentralized capital markets, and at the core right now, you guys are doing uncollateralized liquidity for institutions. How do you see the Clearpool ecosystem evolving as DeFi becomes more adopted and more sovereign countries are involved, more institutions, and eventually the institutional money flow comes in? How do you see the verticals changing along that course?
Yes, it's a great question, because we thought about this from the beginning as well, and it's always been our intention to kind of want to be like the bridge between DeFi and TradFi, and it sounds a bit of a cliche, and a lot of people say it, and but it's needed, right? For DeFi to grow, the only place that capital is going to come from is TradFi. But I don't see it as like a battle. Right? I don't see it as like I don't think we should be knocking what's going on in traditional markets. It's it's worked for a very long time, but ultimately DeFi is just a better way of doing it. And I think those guys are starting to wake up to that. But the problem is they're very heavily regulated, and this is a space that at the moment is virtually unregulated. So it can be difficult for them to be able to make the step into this space. But that's something that we wanted to try to focus on from the very beginning. So working with Hex, we wanted to make sure that we were on the right path, on the right side of that. So we developed this solution to be able to verify the identity of our borrowers, to verify their KYC status. And we've been we'll have that in the MVP when we launch, and we're already working on sort of like future versions of that, and these things are the kind of almost the first step, I think, in terms of like attracting more traditional lender profiles and borrower profiles into this space. The other thing, especially on the lending side, is the ability to be able to manage and hedge risk. That's something that is these guys are kind of mandated to be able to, or they have to be able to do that. Otherwise, they just can't participate. So we knew that. I worked in capital markets for a long time, and Alessio, my co-founder as well. So we knew that that's what was going to be needed, to attract these guys. So I think those two things, kind of like compliance, I guess, onboarding KYC, getting that part right, staying ahead on that side, but also the sophistication of the protocol, of the platform, of the products that will be built on top of it. So for these guys to be able to measure risk, so we already talked about that with X margin, to be able to manage that risk. That's why we did the tokenized credit, the single borrower pools. But then also to be able to hedge. So in the future we'll be looking at introducing centralized derivatives, something kind of similar to credit default swaps from traditional markets, interest rate swaps, token stripping. These are the things that those guys need to see, to be able to be comfortable, moving into this space. So when we talk about, those guys, who are they? So I think, obviously, on the lending side, looking at, the sort of traditional lenders that everybody's, probably quite familiar with, and, asset managers, maybe hedge funds, looking for yield. There is the arbitrage play here, of course, so much higher in DeFi. So I know a lot of guys are looking at that. How can we get into this? But you just said something really interesting in the question about like sovereigns. So we've seen like sorry, I forgot about the name of the country. Some Bitcoin in South America.
Maybe? Oh,
In South
El Salvador.
El Salvador, and there's some others that are looking at it. I think Laos in Asia. You mentioned maybe some of the Eastern European countries. I think that basically El Salvador is not going to be the right. It's not going to be the last, and that's really interesting because these guys, will look to issue sovereign debt on the blockchain and not in a central bank digital currency way, which is very important. So if we do see that emerge, that could be huge, right? And you can see, sovereigns issuing basically like the equivalent of bonds on the blockchain.
Right.
That's going to be done through a protocol like Clearpool. I think that's a very, very, very exciting prospect for the future. That's kind of like the other end of the scale. In between, I think really, it's our job to get out there and sell this to as many type of institutions as we can. On the borrowing side, as long as you're an institution, you can prove that, and you can go through the process that we've set out. Then really anybody can be a borrower as well. And you can set up a pool on Clearpool, and because you might be paying the same rate that you would pay in traditional markets, but because on Clearpool lenders get additional yield in terms of Cpool LP rewards, there's only one choice that you would make in terms of lending to that company. Of course, it's going to be on Clearpool because they might be paying 5% in the traditional world and 5% on Clearpool, but on Clearpool the actual yield might be something more like 25% because of the opportunities for staking the LP tokens and getting the Cpool rewards. So I think as borrowers start to realize that as well, they can start to sort of flock to this market, and for them as well, it's a great way of diversifying their borrowing. That's something that these guys are always wrestling with in the real world. I know this. I used to work in capital markets for a while. We did a lot of primary issuance of bonds, and one of the key things that a lot of corporates and financials look for when they're sort of selecting like lead managers for bond issuances is like how can you diversify my investor base, basically, and that's what they're really looking for. And DeFi obviously is a great way for them to do that. So I'm really excited. I think in the future we can see many different types of borrowers and lenders come into this space. We're definitely, hopefully, going to be positioning ourselves just in the right place to be able to attract all of that. And we've got people that are working on this right now. So Jacob is our CCO. His background is kind of in like sort of fintech, and then previous to that in like the startup world with like Rocket Internet. But then we've got other guys, who are joining right now that are coming from traditional finance, and they're going to be focused purely on going out and kind of like talking about Clearpool to guys in that space. And it's not going to happen overnight, but we're very confident, and we're focusing a lot on that.
Yeah, definitely. So I guess question we have, Robert, from the community, and you're speaking to a bunch of lowland gorillas, so we need to clarify, I guess, in terms of liquidity pools, what the incentive is at the moment, and do you see these type of staking incentives carrying forward when whitelisting for borrowers begins and new pools are created? How do you see the transition from the early staking pool we have right now on all the platforms relative to when actual borrowers start coming in? How that staking reward might change, and is there any intention to move forward with really attractive APYs for stakers?
Yeah, it's another great question. So yeah, of course, the reason the 100% APR is there is because that's kind of like our way of saying thank you for being an early member of our community. We know that we haven't launched yet, and that people are already out there. Yourselves and many others that are talking about Clearpool, they're kind of like doing part of our marketing job for us. So they should get rewarded for that. So we wanted to put that in place, and again this is a very competitive space. Not just borrowing, lending, not just DeFi, but crypto in general, right? There are other areas where you can go and buy tokens and stake and get high APY. So we wanted to do something that was significant and that would be good for our early.
Hi, Robert. Sorry, I think voice cut out for a moment. Auditory. Are you there? Hi, Robert. Can you hear us? It's a bit of technical issues here. I don't know if you can hear us, Robert.
But then you'll be able to.
Hi, Robert. I think we're having some auditory issues.
Yeah.
Okay, we're good. We're good. Back.
Trying to turn my Telegram off, but some reason.
Hoff, is it good? Is it okay if I can ask Rob a question?
Absolutely, absolutely, boss.
Oh,
Sorry, I didn't finish the last one yet.
Oh, yeah, we couldn't hear you. Yeah, we couldn't hear you, Rob.
Okay, you can hear me now, yeah.
Yeah.
So those rewards will taper off. It's not gonna drop off a cliff, but of course it will taper off. But the opportunity will be to stake on Clearpool, and the reason is that if you're staking, the more you stake and the longer you stake, the higher the rewards will be on Clearpool for interacting with the protocol. So of course, one of the main things is going to be whitelisting borrowers. There's some work involved in that, and of course, people should get rewarded. So the rewards are actually going to be pretty high, and the reason is, of course, because we want to get people actually, looking at these borrowers, and it's the community that's doing the work here, and it's down to you to decide who you want on the platform. So yeah, simply, the more that you're staking, the longer that you're staking your tokens, the higher the rewards are going to be for doing that. And the same thing with being an LP. When you lend into one of the pools, you get CP tokens. You'll stake those CP tokens to earn LP rewards. But if you're already staking Cpool, those rewards will be much higher as well. And this is where Cpool becomes really attractive from a lender perspective, because the yield for lending to a top crypto trading firm like Wintermute, for example, or Amber, is going to be really lucrative, because of this process. So we'll release more details of exactly how that's going to work nearer the time. But there's going to be plenty of ways that people can interact and continue to earn significant APYs through staking and holding the token. So it's going to continue. Don't worry.
Glad you cleared that up, Robert, only because some people in the community, when they read into it and they understand that the staking rewards could potentially be for institutions that are borrowing, but they don't realize that it's actually Wintermute and these big companies that are who you're providing the liquidity to. So it's not like a startup company. So the risk profile of you staking whatever you're investing is actually reduced because you're dealing with Wintermute as opposed to a startup, an unproven startup, where you're lending directly to them. So I think that distinction is very important when people understand they're locking up their funds longer term to stake. They're very secure relative to the idea that you might be lending to a smaller startup. So
Exactly. I mean, the lending part is, as you said, these are high profile companies, with big balance sheets and and huge reputations to keep. So I think they're very reputable and quite safe. But you can redeem that liquidity at any time, providing there's liquidity available in the pool. You'll be able to redeem.
Yeah, we have a lot of guys that are staking right now in our community. So you've definitely built trust and confidence. Clearpool's built trust and confidence with the community.
Additional source of liquidity. The staking really comes in. You're staking the Cpool on our platform. That just allows you to get higher rewards. So you might be happy with getting I don't know what it may be, 8, 10, 12% from these guys. But if you stake, that can be more like 30, 40, or 50%, depending on how long you're locking your tokens up for. But you're locking them up on the protocol, not with Wintermute. It's the stable coin liquidity that you're lending to Wintermute, and you can get that back whenever you want. So it's really just interacting with the protocol in terms of like locking liquidity up.
Yeah, that's great. I know Retta had a question. Retta, if you're there.
Yeah. Hey, Rob, can you hear me?
Yes, I can.
Hey, first I want to say your project is great.
Thank you.
I've been reading about Clearpool since February, I think, on one of your mediums. I got interested because you guys do work with institutions, want to make a gateway for institutions. Because I was also reading about Corrado. I don't know if you know them. They're also an institutional gateway, and then you had Clearpool. My question is, are you guys also going to introduce the dark pools, or is that not relevant in Clearpool for investors, like institutional investors?
Dark pools, as in you don't know who you're lending to.
Yeah. For big, because big investors, they want to have a big use liquidity without impacting, the market that hard. I don't know how that's going to implement with Clearpool, but just
it's really interesting. We looked at it some time ago, and there are ways of doing this, and it is something that we have spoke about. We spoke about this with some of our investors. The same question came up with them, so it's a good question. And the answer is, I think we probably will. We know that there are borrowers out there that want to remain anonymous, but of course, it brings up some issues. So first of all, of course, we still need to be able to verify that this is a reputable company on the other side, that they have done some KYC. So that's the main thing, but that can be done. That technology exists, and it's essentially the same sort of technology that Xmargin use. to sort of compute this risk score based on the borrower's data from their trading data from exchanges. They Xmargin don't actually get to see their positional data. They don't get to see their trading strategy, but at the same time they can very accurately compute exactly how much risk they're taking on the exchange. So it's zero knowledge proofs, and it can be used as well to keep the identity of the borrower anonymous. So it's something that we're looking into. Of course, it will come in a later version. And yeah, Corrido is interesting as well. We've known about them for a long time. We got introduced some time ago, and we've spoken to them. So they're also kind of doing stuff in that space as well, and we're constantly in touch with those guys. I think it's a great project as well. There's some very intelligent guys over there. So yeah, I think definitely watch this space for more on that. I think it's a good idea, but it really needs to be done in the right way. It's not something that you would want to rush into.
Yeah, I understand, because I asked the question because on your website it says decentralized capital markets, right? So that's why some people want to stay anonymous, even if they lend, from Clearpool. That's why I was curious. Otherwise, you have to be transparent, and you have to say, we are maybe not decentralized, we're just centralized, and we can see your data. Because I can imagine big lenders or big investors, their reason to use Clearpool is because they can lend anonymously, right? That's why my
So I mean, basically, it can still be decentralized. You can still have the you can still have the identity of the borrower, and it can still be decentralized. So I mean, right now when we launch, the borrowers, of course, that we're lining up now, that we've talked about, are already being onboarded right now. Okay, that's being done by the core team, and that will continue for a short period of time, until we are confident that we can sort of hand that over to the community. So we need to test the rewards mechanisms and see how the voting would go. Of course, what we'll do is we'll introduce like a pilot first and get some data on how people are doing that. But essentially, once you have that, it's the community that are voting in the borrowers. The information that is being displayed about the borrower, in terms of the credit score, is all coming from on-chain, and it's decentralized from the lender profile, from the lender side. From day one, anybody can connect via Web3 and become and lend to any one of these guys. So the idea for Clearpool is that we'll have that process on both sides. The lending and the borrowing. They will just be interacting with the protocol. There will be no Clearpool technologies sitting in between that. There'll be no core team making any decisions. Everything will be done by the community and by the protocol, and we're just essentially building the technology to allow that to happen. But it's easy to do it from the lender side, and it'll be completely decentralized from day one. But from the other side, just really for the security of everyone involved, it's better to sort of like progressively decentralize that borrower side of the protocol.
No, thanks for the clarification, Rob.
That's a great question.
I have two last questions, and
Sure.
because now I have the chance to ask it. So you guys work closely with institutions, right? You guys have contact with them. How is the demand from them, and how can you see it for the upcoming years? Is there a lot of demand from institutions that want to use this, or is it real what we read, on these, Twitter news and all that stuff? Because you guys, know them personally. So is there huge demand?
Yeah, there is huge demand for uncollateralized liquidity in this space already, right? So all of these trading companies, market makers, crypto hedge funds, they all need liquidity to execute their strategies. So So the demand is there, and the space is still growing, right? So there's already huge demand in a growing market. All right, that's exactly where you want to be. So on the borrowing side, that's we see the demand continuing to grow. Even just in that sort of like that typical crypto native borrower profile. But as we discussed earlier, as you start to look outside of that type of borrower, there's so many other potential borrower profiles that could come into this space. Already, if we stay in crypto, there's the potential for like DAOs to come in and borrow on DeFi protocols such as Clearpool, and crypto projects, and then there's and then of course you can go on forever talking about the potential in attracting more sort of traditional borrowers. So yeah, the demand for it is massive on that side. The thing that has really surprised us is the demand on the lending side. This is something that we thought we would have to work really hard to identify and to maintain. We knew or we assumed early on that we would really have to prove ourselves to be able to sort of generate that demand on the lending side, but it's actually come to us, which has been really surprising. And we've got a lot of institutional lenders that are now being lined up. So they'll kind of fill those early pools, but ultimately, anybody can be a lender, right? So I think, it's important for us to find those institutions, both in this space and in traditional markets as well. But it's also important that we make people realize that you can do this as well. You can lend $100 if you want, to your favorite crypto trading company and participate in the same rewards that the big institutions get access to. And in TradFi, that just doesn't happen. You cannot do that. Those opportunities only go to the big guys.
It's very interesting to see, because the main goal is also to connect CeFi, centralized finance, with DeFi to give them a taste of DeFi, right? That's the end goal. That's the end goal of this all. Getting CeFi to DeFi in the future. Yeah. So that's very interesting. And why did you guys? Because I see on your roadmap you have the announcement of the Ethereum Layer 2 support, right? Why Ethereum? Because at the moment, they have scalability problems. For example, the fees are really high. Are you not worried about that? And was Ethereum your first choice? And if you're gonna use Ethereum, you guys gonna implement like Arbitrum or Optimism to remove the fees?
So the announcement is coming. It will be next week. We're trying to get it all ready for Tuesday. We had it in the roadmap for November. So hopefully we'll make it by Tuesday. It's definitely coming. So the whole thing has been agreed, but marketing companies have to agree on stuff, and there's a lot of back and forth. But hopefully it will be done on Tuesday, and you guys will be able to see. It's a big announcement. Basically, so coming back to Ethereum, why did we choose Ethereum? So it was just the most logical place for us to start. We decided very early on with one of those early calls that we had when we were getting feedback that we were going to do this. That Clearpool was essentially going to be a cross-chain, multi-chain project. And we did speak to we have been speaking continuously to other blockchains. Ethereum was just the most logical place for us to start, and there's obviously people always talk about the gas fees, but ultimately Ethereum is still one of the best smart contract platforms there is. So we were quite happy to start there. Of course, we knew that. As I've just said, it's important that people realize this is not just an institutional protocol. Anybody can be a lender, so we know that the high fees are a problem, and that's why we've implemented this solution, which we will announce next week. Beyond that, next month we'll also be announcing which blockchain we'll be building on next. And this is also, very, very exciting because it shows, that we had that vision very, very early on, and we're building that vision. So there's and the good thing about that is it means that there's a lot of liquidity on Ethereum. And of course, most people know how to use it, but there's a lot of liquidity locked up kind of on other blockchains as well. And if we build Clearpool on those chains, then it opens it up to all of that liquidity there. And I think Hoff mentioned earlier, we're opening up credit in DeFi, and that's what it's all about, right? It's finding those pockets of liquidity, and I think being cross chain is really going to be able to capitalize on that, which is great for our borrowers, because they can access more liquidity. It's also great for those guys, that have the liquidity on those other chains, right? Gives them another option and something else that they can do with their liquidity. So I hope that explains, why we chose Ethereum, but ultimately we're going to be, I'm very focused in the next year on building on other chains as well.
It's very exciting, Robert. Very exciting.
I think I know where you guys will go, because I think it's the most logical step, and I think that would be Polygon, in my opinion, for their, they are really scalable. You can already build on it, so that's what I think you guys will choose, but that's just speculation.
Well, you guys can debate that and chat.
Yeah, of course.
We have a wager. You won't have to wait long. So
thanks for your time, Rob. Thanks for
no problem at all. It's a pleasure.
Question, Rob. So if you overlay the macro backdrop right now, with the bond curve getting flattened and fixed income protocols in traditional finance really not yielding much, obviously it's the right climate for Clearpool to begin its origin or genesis. And I guess one of the challenges for institutional adoption, which is pretty much the catalyst to eventually sovereign adoption, would be compliance. And that's, a major topic right now with DeFi, and how to onboard institutions within their compliance and regulation. What challenges do you see with compliance and getting institutions on board right now with DeFi in general, and also with Clearpool specifically? And how do you guys go about attending to that compliance necessity in the backdrop?
Yeah, so I think as I said earlier, we've really wanted to focus on this and be on the right side of it. And there's actually no real requirement for us, to launch with any sort of KYC process in place. But we wanted to have it. We wanted to go out with that signal that this is how we are going to do this. We're looking at that. So on the borrower side, we have this mechanism in place. Even when it becomes decentralized, where the community will be able to verify immediately that this borrower is who they say they are, and that they've passed a KYC process with a regulated entity. So that's very important, right? Because it eliminates fraud at that level, and it gives the community, some comfort that that they're dealing with the right people. I think the challenge is going to come in on the other side. So by the way, we're working on other solutions for that as well. It's not going to be just with one custodian. There'll be multiple custodians, and other technology solutions as well, whereby that process will be very sort of streamlined and almost like a Web3 process. But yeah, so I think that the challenge will be on the lender side, because if you want to do this in a truly decentralized way and make it open to everyone, what you can't really do is KYC every single lender. So that's where the challenge is, and I think the one thing we're looking at there is If you want to lend, over a certain amount, you would have to go through, some simple KYC process. If you're an institution, maybe you want to lend a larger amount, then there'll be some sort of enhanced KYC process. And what we're looking into here is a kind of like a one-click solution, right? So it's like this has been the problem for these KYC platforms for years. I've been following these things since 2017, and I always said back then, it's like, they're great, and back then there's like a lot of ICOs, and these things sounded great, but the thing is, you need to have like the same one living on all of the protocols and websites and wherever it is that you need to do the KYC, because otherwise, it's like, yeah, there's this great solution where it sort of like keeps all my KYC, and maybe it just NFTs it, and I can just send that NFT anywhere. But everywhere I'd have to develop, I have to sort of like onboard that same solution, right? They would have to have the same. So there's really only space for kind of like one of them, or a few, if you like. Maybe one for DeFi and one for something else. So, but that's kind of what we're looking at right now. Is like how can we do this where where pretty much everyone can kind of have this sort of like one-click solution to be able to very quickly become a lender, if we have to go down that route of KYCing every single lender. So I think that's the challenge. It's something that we are looking at. Where we've identified already. We're working on it, and I think there are solutions emerging. So I think you'll see that play out. But ultimately, I think that's probably one of the major challenges. But I think it will only really become a real issue when the regulators, really sort of step in and say, these are the rules. You've got to follow them. And our job is to make sure that we're ahead of that game, and that when they do say that, we can continue because we were already on the right track. So that's what we're focused on.
Absolutely. Robert, we really appreciate you taking the time to talk to our server. We have a lot of people interested in the protocol and already invested at this point. Most of us, I'd say a good majority of us, are staking our Cpool as well. Real quick, just because there's been some questions along the way, could you just make the distinction between what the Cpool token or CP token is and Pol? Because a lot of the guys are getting Pol in their wallet, and they're just curious what the difference might be.
So Cpool and which one?
And Pol, P-O-L, I think it was called.
POL is not is nothing to do with Clearpool.
Okay.
No, that's the reward you get from KuCoin itself, because they're using Pol as a staking platform, and as a reward you get Pol in return next to your Cpool.
Yeah. So you get, I think that's there's, you've got to be really careful for scams with this as well. POL, I agree. I think that is the KuCoin one. So that essentially is that's KuCoin's own rewards, which you probably get on top of the Cpool rewards that you're earning for staking. So POL is not part of the protocol.
Right. Okay.
Real quick, Rob, I forgot to ask this. On your roadmap, it's really interesting. It says Clearpool fee 1.0 smart contracts, right? And then you have an audit in December. What do you guys mean with that? In the future, can people build on Clearpool, or am I seeing that wrong? Like you guys want to?
No, so the smart contracts have actually been deployed to the testnet already, and next month we'll have a version with the front end all completed as well, which will we'll invite you guys to test that, and we'll certainly run some way of allowing the community to to pre-register, and we'll select certain community members to test that. So the smart contracts are already built. There's a few parts that are being polished, and they're being deployed to the testnet right now. Once that's done, then the code audit will begin. So we've already selected 2 auditors who are going to audit the code, and we may well go with a third as well. And then in January we'll in the future you will be able to build on top of Clearpool. So if there is if somebody comes up with some way of something that would help the LPs with risk management, whether it's some sort of like interest rate swap protocol or something else, some other decentralized derivative, it can be built on top of, just like right now you can build on top of Compound, and you'll be able to do that on Clearpool.
Beautiful.
Yeah, thanks.
Very
Beautiful.
exciting.
Yeah, indeed. Yeah. Thanks.
Overall, Robert, we're very excited about the protocol. We know how important this is for DeFi adoption, and we're just very grateful that you've spent time with us today to go over some of the details and background. Please, anything our community could do to help you guys grow, let us know. We're always going to be here for you.
No, I really appreciate it, Hoff. It was great to be here. I really like the way that you guys go about it. You do your research, and you don't just sort of blindly pick launched. So yeah, I think just feel free to to come and ask any questions if there are any as we lead.
Absolutely. On behalf of Alpha Commission, Robert, thank you so much, and we wish you continued success, my friend.
Thank you. Just cut out there. I got the end of it. So.
We were after you were giving us accolades for doing deep research and all the work we do trying to discover companies like yours. I just wanted to say thank you so much for everything you've done to instill confidence with our team, and we're going to continue supporting Clearpool. So thanks a lot for your time, Robert, and please do reach out if you need anything at all from us.
Thanks, Hoff. I really appreciate it. Thank you.
Cheers, Robert.
Take care, guys. Wish you all the best.
Take care.
Thanks. You have a good one.
Bye-bye.
See you.